Okay, so true story. Tim Sykes, a college student with just over $12,000, decides to dive into penny stocks. And you fast forward 3 years, and now he has $1.65 million using penny stocks to accumulate his fortune. Now, Tim's story of turning a modest investment into millions of dollars is the kind of thing that is an inspiring tale that keeps people chasing the potential in these tiny stocks. But just as quickly as those success stories can emerge, there's the other side. A husband, perhaps just as hopeful, risks their hard-earned retirement savings and loses almost $300,000 on penny stocks. Today, my AI assistant Tiara and I will dive into the risky world of penny stocks and share insider tips to help you decide if these stocks are truly worth the risk.
Sit down. Take notes.
Now, as a reminder, like and subscribe to the channel if you enjoy this video to support me, and stick around to find out if penny stocks are a thrilling opportunity or just a really stressful gamble. So before we dive in too deep, let's define what penny stocks actually are. And contrary to what some people may think, they don't often trade for pennies anyway.
Despite the name, penny stocks aren't always worth just a penny. In fact, the term penny stock usually refers to shares of small companies that trade for less than $5 per share.
So here are some key characteristics of penny stocks. So aside from being less than $5 a share, the total value of all their shares is typically pretty small, meaning they have a small market cap compared to other bigger stocks out there. They also have a lower than normal trading volume, so they aren't bought and sold as frequently as the big names. And they aren't usually listed on the large exchanges like the New York Stock Exchange. Instead, they're usually traded over the counter or on smaller exchanges. And lastly, it can be tough to find reliable info about these companies. So you can think of penny stocks like those hole-in-the-wall restaurants in your city, right? They're not well known and they're a bit risky, you might get food poisoning, but hey, they're cheap. And who knows, you might discover a hidden gem.
Or die.
Now let's move on to the potential benefits of penny stocks.
First up, the massive growth potential. Imagine buying a stock for 50 cents and watching it shoot up to $10 or even $50. That's a return that would make even Warren Buffett's head spin.
Now, this is the dream that keeps penny stock investors up at night in a good way. So if you manage to find the diamond in the rough, right, you could be looking at returns of 1,000% or more. So for instance, you know those Monster Energy drinks that you see everywhere? Well, in the early 2000s, Monster Energy, then known as Hansen Natural, it traded under 6 cents per share. Today, it trades for over $100 per share, representing an increase of 166,000%.
So that's not bad for a start.
So yeah, those cases are rare, but it does happen from time to time.
Next, let's talk about accessibility. With such low prices, you can start investing with just a few bucks in your pocket. It's like the dollar menu of the stock market. You can grab a few shares without breaking the bank.
This is something that most amateur investors get excited about. So when you're buying the big name stocks on the stock market, or even a lot of the bigger funds out there, it's hard to get started with, $100 because many times a single share is priced over that. But penny stocks aren't like that. Because of their low share price, you're able to buy multiple shares with a low amount of money, which could really pay off if the stock rises quickly.
Another perk? The thrill of the hunt. Researching penny stocks can feel like you're a stock market detective, uncovering hidden gems before the rest of the world catches on. It's exciting, and for some people, that's half the fun.
So while it is true that you may enjoy the hunt, keep in mind earlier how I explained sometimes it's tough to find reliable information about these companies. And because of that, it's really hard to make good investment decisions, as most of the time, public information is all you have to go on.
Lastly, penny stocks can be more responsive to news and developments. If a small company lands a big contract or makes a breakthrough, its stock price could skyrocket overnight.
Now again, this is rare, but it definitely is possible with the right set of circumstances. Can you imagine how cool it would have been to have gotten in early on a company like Monster Energy drinks? You'd be retired, and you'd probably be a multimillionaire too. But let's come back to reality here for a second. For as many positives around penny stocks as there are plenty of negatives that exist too. So let's dive into those so that we can compare.
First things first, let's talk about volatility. These stocks can swing wildly in price, sometimes for no apparent reason. Imagine waking up to find your investment has dropped 50% overnight.
Suddenly, penny stocks probably don't sound as cool now, do they? I think the issue with penny stocks is that because they aren't listed on the larger exchanges, it's unlikely that they'll face the same scrutiny in their record keeping and with their business overall. That means stock manipulation is much more possible, and there's gonna be a lot of information about the company that you'll never even hear. And that's because, well, since they're so small, no one will ever report on it. Which goes right into the next point here.
Next up, we've got the scarcity of information. Remember how we said penny stocks are often small, unknown companies? Well, that means it can be super tough to find reliable info about them.
So there you go. Anytime I'm looking into investing in a stock, I dive deep into their quarterly reports, news, and really any information I can find on them. But if that information isn't available, I'm sorry, but I just don't see how you can make an educated decision on whether or not the stock is actually worth investing into.
I'm out.
Now let's talk about something not so fun. Fraud. Sadly, the penny stock world is a bit like the Wild West, and there are some shady characters out there.
All right, so have you ever heard of the pump and dump schemes? You probably have. But for those that haven't, this is where scammers, they basically will hype up a stock, watch the price rise as people buy in, and then they will sell their own shares for a profit, leaving everyone else high and dry. Now, if you got into the world of NFTs, you saw this happen all the time. There were NFTs like CryptoPunks, which sold for upwards of $23 million at their peak, that have now dropped off to a very small fraction of that price. And even worse than those, there were plenty of people behind NFTs that would make the NFT, hire influencers to pump up the price and the whole reputation of the NFT project, and then they would wait for the peak, and then they would sell it all and just completely screw over everybody else. Now, to be completely honest with you, it's kind of wild what happened with NFTs. And now that things have cooled down, I'm really surprised that more people didn't go to prison for all the terrible things that they did to other people financially.
Here's another big one: liquidity issues. Penny stocks often have low trading volumes, which means it can be hard to sell your shares when you want to.
Imagine finding a unicorn penny stock, it going up to 500% in a single day, and then you click to sell the share, but no one is buying because they've never heard of it before.
I feel so stupid.
Believe it or not, this can and does happen from time to time, especially if the company isn't listed on a large exchange.
Let's not forget about the high failure rate. Many penny stock companies are struggling or just starting out, and a lot of them don't make it.
So to me, this is the biggest thing. Generally speaking, regardless of whatever brilliance you think that you may have, so many penny stocks absolutely fail, and it's more than likely that yours will too.
Lastly, there's the risk of delisting. If a company's stock price stays too low for too long, it might get kicked off the stock exchange.
In the New York Stock Exchange, you rarely hear about this, but it does happen. And if it does, good luck finding someone to buy those stocks in the future. You're most likely stuck with them unless the company gets really popular all of a sudden. Now that you know the positives and negatives, let's get into the alternatives to penny stock investing that you should consider.
First up, we've got index funds. Instead of betting on one company, you're investing in a whole bunch at once.
For anyone who's looking into investing for the first time, I recommend this before anything else. So funds are very well diversified, they have low fees, especially if you go with something like Vanguard, and usually are pretty affordable to invest in.
Next, let's chat about blue chip stocks. These are shares of big established companies that have been around the block a few times.
So for these, we're talking about companies like Apple, which is $230 per share, Walmart, $82 per share, and Coca-Cola, which is $65 per share. These stocks are very unlikely to double overnight, but more importantly, they're also not going to be losing their value overnight either. The hard part here is finding stocks that you can afford, especially if you don't have a lot of money, but it can be done.
How about exchange-traded funds, or ETFs? These trade like stocks, but give you exposure to a basket of securities.
ETFs are really similar to index funds, but they have some subtle differences. But most importantly, you can find ETFs listed directly on the stock exchange, so there's no need to meet, minimum deposit requirements like most fund providers have. And if you're just starting out and you don't have a lot of money, finding a good ETF similar to a broad market index fund could be a great option to start building up your investment account. Just buy a share and boom, you own dozens or even hundreds of stocks depending on what the ETF is.
For those of you who like a hands-off approach, robo-advisors might be your jam.
Robo-advisors are digital platforms that can create and manage a portfolio for you based on your goals and your risk tolerance. Now, I don't usually advocate for a completely hands-off approach when investing, but if that's your thing, it is possible. Betterment is a great example of a platform for this. And the best part about it is that the minimum to start investing is only $10.
This is what I need.
Lastly, don't overlook the power of good old-fashioned savings accounts and certificates of deposit, CDs.
So this investment strategy is boring, but I've said before on my channel that sometimes boring is the best investment strategy. And I even made a video about it that you have to watch if you want to learn why. So I'll make sure to share that at the end of this video so you can understand exactly what I mean by that. All right, so we've gone through the positives, we've gone through the negatives and the alternatives for penny stock investing. But the question is, does AI think that this investment strategy is still worth it? So let's see what Tiara says. And to be completely clear with you, I did not influence her, output here in any way.
In my opinion, penny stock investing is not worth it for the vast majority of people. The risks far outweigh the potential rewards. Sure, the idea of turning pennies into fortunes is exciting, but it's more likely you'll lose your shirt than strike it rich.
So this might just be a harsh reality for you. The penny stock market is like a casino where the house always wins, and you're not the house. Now, I live in Las Vegas, so I know a thing or two about gambling. And unless you have some information that the general public doesn't, have, I'm sorry, but you're gambling with penny stocks. It's plain and simple. Now let's think critically for a second. So if penny stocks were really such a great deal, why aren't the big players and the financial experts jumping on them?
I don't know how to answer that call.
It's because they know better. These stocks are often riddled with scams, manipulation, and companies that are one bad quarter away from going completely belly up. And while we've talked about Monster energy drinks a few times in this video, well, Tiara wanted to mention this.
Let's be real. For every success story like Monster Beverage, there are thousands of penny stocks that crash and burn, taking investors' money with them.
The lack of information and transparency in penny stocks is a huge red flag. You wouldn't buy a car without knowing its history. So why would you invest in a company that you know next to nothing about? Plus, there are so many better options out there. Index funds, ETFs, or even well-established growth funds offer better chances for long-term wealth building without the insane risks. And these options, they let you sleep at night without worrying about your investment completely vanishing by morning. So unless you're a seasoned pro with money that you can afford to lose and a lot of time to research, just stay away from penny stocks. They're more likely to empty your wallet than they are to fill it. So that all said, where should you invest your money then? Well, I'm glad you asked. This video right here tells you some of the most undervalued stocks right now. And remember earlier when I said boring investing was a good strategy? Well, you can watch that video right over here. So if you like this video, make sure to give it a like so that others will see it. And as always, make sure to subscribe to the channel to unlock financial success one AI chat at a time. Thanks for watching.